Hey, good morning, everyone, and welcome to today's monthly webinar for May 2023. So for today's session, as always, it will be recorded and a copy of the recording will be available on our YouTube channel. So if you do miss any part of it or would like to rewatch or share with your colleagues, a recording will be available. If you do have any questions, please enter them into the Q&A panel, which is usually found down the bottom of your screen. Our team's on board to answer any questions that you do have, and a copy of today's slides will be sent to all attendees as well. So today, I'll go back to introduction. So if anyone doesn't know me, my name is Jeevan Toki. I'm the head of Simple Fund 360. I'll take you through the changes that have taken place with Simple Fund 360 and Simple Invest 360 for May. Joining me today is Aaron Dunn, CEO and co-founder of Smarter SMSF. Welcome, Aaron.
Thanks, Jeevan. How are you?
Very good, thank you. How are you?
Very well, thank you. So looking forward to providing an update, I guess, both technically and what's been happening within the Smarter SMSF platform.
Sounds great. Okay, and then at the end, Aaron and I are happy to answer any questions you have. Please enter them there in the Q&A panel as shown before, and we're happy to go through and answer any particular question you have. If you've got any particular questions that are private in nature, we'll take them offline and obviously send them through. Okay, so with Simple Fund 360, we released the update last week on the 18th of May. And for June, we've got two updates coming towards the end of the month. So one there on the 15th and another one there on the 29th. Okay, so let's go through the changes taking place. So the first one we've got there is around the create entries process. So where a member turns 65 during the financial year, what we do now is automatically move the preservation components there at year end, obviously from preserved or restricted non-preserved through to unrestricted non-preserved. So let's take a look at this in Simple Fund 360. So obviously down on the compliance tab, okay, I'll go through and actually I'll reverse entries, period. Okay, go through and create entries. Okay, and what you'll see, as you can see down the bottom there, is I've got there the alert, and we know which member account it's done this for. So obviously, where there's multiple accounts, you will see alerts there for multiple accounts which have taken place. And what you'll see there on the transaction screen is really just a movement across. Okay, so next one there is 2023 SMSF Tax Time. So good news, as we discussed in our previous webinars, is there's no changes for 2023 compared to the 22 return. So there's nothing new to really show. It's just really, I think in most cases, what we see there is just a change every year. So with that, obviously, the wind-up funds that you go through and process will now use a 2023 stationary. And obviously, as per normal, the lodgement around this is dependent on the ATO. So this is something out of our control. There's normally a down period for the last 2 weeks of June where 2023 and other returns cannot be lodged while they update their systems. Once we have confirmation of these dates, we'll make these public across the board. However, they will be used, but generally for most electronic lodgement, it does open up sort of around the 1st of July mark. Just noting back there, obviously, into our tax compliance screen. So obviously, as I mentioned, everything you'll see that has been updated is for around 2023. Okay, so wrong year, wrong financial year, could have had the right year. Go through in the right year. You do have the ability to lodge those through to Xero and to Lodge IT for those that utilize those partners there. And we covered obviously how those worked in the previous webinars. If you need some details on those, just look in our help and we will go through and it'll go through and cover how to actually do those. Next one there, document screen. So with the document screen, there's a couple of changes there. So the two big ones there is around renaming documents. And the other one is the ability to send reminders there for digital signing. So let's have a look at that. So jumping across there to the report screen. So going to reports, then documents. Okay, so I'll just close there. So first of all, is you have the ability to rename documents. So you can see maybe particularly this one here. I've got a rental statement there that I've uploaded. I've got now the option, if I click on the action button, I've got the option there now to rename, and I can go through and rename to whatever I like. So obviously previously, in order to rename documents, you would have to delete that document from the screen and re-upload it with the correct one. So that obviously now has a significant there. So I'm just going to put in there property one. Obviously an impact. What we do though is we do actually index the name. So if you are searching across the document names and you look for the, if you enter in the actual old name or new name, it'll still locate that particular document. So it's obviously picking that up and renaming through that. What we've also added is some more filters around the document screen there as well. So you've got the ability to see or filter up top here, which documents have been categorized with a tag and which ones haven't. So you have those options there. And we've got some more options here under the filter menu where you can actually go through and find particular documents based on either the type, the tags that have been done, the document status. So in case I might filter for signing, okay, and go through and find those particular ones. Okay, so I filtered down now for this particular document, and the other change we've added in there is the ability to resend reminders. Reminders there, so for digital signing. So obviously this document here hasn't been actually, so this one here, sorry, hasn't been signed. So you can see here in the workflow, I've actually sent it out. It's still waiting for a signature. And it's still, sitting there in that particular status. So what I've got here now is the ability to resend the email here. In this case, for this particular document, it's only got one outstanding signatory, which is Lois, and the sole signatory. So it'll go through and obviously resend the email. Where you've got multiple signatories, and the case where, let's say in the case, make it a basic example where you've got two signatories, on one of those has already signed, it will only send the reminder email to the party which hasn't signed. So it's not going to obviously bug those signatories which have already signed and already completed the work that needs to be done. Okay, it's now the other option there going through. So that's obviously sending reminders there for digital signing. The next couple options here is a couple of integrations we've added in here for property, one being for compare and save and the other for property pricer. So let's go through and have a look at those. Okay, so if we jump across there to the property dashboard. So the first integration we've got here is with compare and save. So this provides the ability just to look at loans. So for the loans, it doesn't matter whether they're in Simple Fund 360 or not. It just gives you the ability to run a comparison over either, say, a residential, investment property, or SMSF. So let's put SMSF for this purposes. Okay, so you put in all the particular details for the existing property. So I'm just going to put in a basic one. So it'll go through based on obviously the particulars. It'll go through and show comparisons. So this can be used, I suppose, just for comparative reasons to see if there's better deals out there for your clients, or just to see if your existing brokers coming back with something that which is in range. At this point in time, there's no sort of commitment or anything like that. If your client doesn't have an existing broker arrangement, or your firm doesn't have a broker, you've got the ability to send an inquiry through from here and obviously pre-fill using your BGL details. So something that can be used, as I said, regardless of whether the client has the property within Simple Fund 360 or not, and it can something obviously while interest rates are constantly changing at the moment, something that can be of value there. The other integration right now is with property pricer. So obviously for property valuations, we do have the existing one with CoreLogic, and this is with another group called Property Pricer. So they offer just residential valuation. So you can either get a current valuation or a retrospective date there. With that, their point of difference is they look at all the particulars of the property in terms of the structures, the age of the property, how many bedrooms, what's the condition, what sort of features it has, and I suppose a few more details than the standard valuation. And obviously, it's another, I suppose, is considered significantly cheaper. than RP data. So it's just another option there in terms of your tool shed. With commercial properties, we are currently working with a group that can provide commercial and rural property valuations across all of Australia. So we're looking to hopefully get up and running with them in Q3 this year. Okay, so reports. So a couple options we've added here. First is for combined rental statements. So where the entity has multiple properties, you've got the ability to combine those all into one properties. And we've updated the super choice form to the latest ATO format. Okay, so let's go through and have a look at those. So across there into the report screen. Okay, so if we find I'll clear that out and we'll search for the first one, which is the rental property statement. So you now have an ability there under settings. So if you click on the setting toggle there on the right hand side, you'll get the option there of whether you'd like to generate that for all properties and would you like to combine those, which I've got obviously selected at the moment. So obviously the combined statement will go through and as expected, just generated all the properties within the SMSF. I'll just make that a little bit bigger. Okay, so everything there within SMSF and combine that for all the properties there. Okay, going back. The other one, as mentioned, was the super choice form. So the ATO is now updated that particular format. So that's now updated to the format which matches now the ATO latest version. So you'll see the full one there, that particular one. Cool. So one there for inter-entity distribution journal. So this is for Simple Invest 360. So where you have a trust within Simple Invest and the beneficiary is a unit holder, beneficiary or unit holder is an entity within Simple Fund 360. When you actually distribute the profit at period end, so this could be end of quarter or end of year, we can automatically now post the transaction straight into that beneficiary's ledger there as well. So let's take a look at this. Okay, so switching across now. So in Simple Invest 360, I've got my trust selected, so I can go to the compliance period. So for Simple Invest 360, very similar to for SMSFs, there's a year-end process, which is period compliance, where it'll calculate the taxable position, what's the earnings for the fund, and what's the net income ready for distribution to the beneficiaries or unit holders, depending on the trust type. Okay, so once I've actually selected that, okay, I've got my beneficiary distribution screen here, where I can actually distribute to members based on either a dollar amount or percentage. So in this case, I'm going to go, distribute to two of the individuals there, 30% each, and to the company, which could be, say, a trading company or bucket company, and distribute across there into 40%. In terms of the taxable information, you've got the ability there to also autofill the tax components based on the percentage across there. And obviously different options depending whether you're, and obviously other options if you are income streaming or not there as well. Okay, so I've got all those particular ones there. So if I go now and, oops, got a rounding issue there. Okay. So if I go now and post that, okay, this option will now pop up where it's actually detected that obviously the beneficiaries are actual entities. So I open that particular tool. Okay, so in here, it's actually going to post directly to the relevant one. So obviously you can see here in terms of the company option, the company isn't in the correct position to be able to accept those journals yet, so it's not going to auto post those. But you can see the two individual beneficiaries are, so I can post those through to both those individual accounts and will automatically post then the distribution accounts along with the tax components there automatically. And then obviously as part of this process, I can go through now and continue on to the distributions for, the tax return here for the particular trust. If I switch across to that individual, so I think it's Jonah, and I'll go into the accounting screen. So you can see here now it's actually posted that journal automatically. If I go through, it's obviously got all the tax components that we had auto calculated there automatically. So obviously saving a bit of time there, where the beneficiary obviously is within Simple Invest 360. Cool. So coming soon, a couple of things, obviously in the month of June. So we've got our fact finder report for 2023. We've got the 2024 changes for the financial year coming through. So that's obviously for things like the pension limits, which Aaron's about to cover in the next section. We've got some things obviously around the transfer balance, the transfer balance caps that are changing. And obviously, for T-bar, the other issue is obviously around the other change there is around all funds switching across into a quarterly time frame. So you see a lot of those changes will take place over the month of June. Also coming through across there is the 2023 tax return that I just touched on, as well as the company tax return. For Smart Docs, what we are currently working on, so I dare say this will probably be available around the sort of July, August mark, ready for the tax season, is the ability to read the annual tax statements and auto create the transactions with all the components automatically from that particular tax statement. So once we have that in position to be able to demonstrate that, we will. Okay, so then obviously for practice management, so these two are currently being beta tested at the moment. So we've got some firms running pilots at the moment, taking on that feedback, and once it's happy from both sides, we'll open this up across the board. So if you are using either APS or MIB GreatSoft for your practice management, please reach out to our team or your account manager, and we can provide further details of how that works. Okay, well, so I'll pass over the next section now, which Aaron's going to cover. So Aaron's going to give an overview, as he touched on, with the budget that just took place. So a fairly sort of mediocre budget in terms of SMSFs with all the other announcements prior to that, and some things that are happening around Smarter SMSF. So Aaron?
Excellent. Thank you, Jeevan. And I guess there's a couple of questions there maybe before we kick off that I guess they're both technical and practical, Jeev. So we might, if you're happy, we could have a quick look at them now, because I think the valuation thing is really important, and it's going to be super important, of course, with this proposed $3 million concession thing as well. So that comparable sales piece is obviously crucial to that overall process. So I guess we had a couple of questions there just around that comparable sales, and most of those, I believe, in the marketplace that now are complying with what we see in terms of that requirement within the SIS regulation 8.02b. So
yeah, so I was going to say, with the comparison sales, my understanding is they both the ones from RP Data and also from Property Pricer do provide the comparable sales. Yep. Across that board there. Obviously, for the ones we do with commercial and that, I'll provide updates once we have those.
Yep. Excellent. All right. Well, today, as Jeevan said, was just to provide an update on a couple of key areas that we have seen, obviously, from a technical perspective over the past month or so. And then, of course, as we move into the end of the financial year. And two of those key issues were, of course, announced in this year's federal budget. Some of it we already knew of. So our better targeted superannuation concessions, which was around our additional tax that will apply to an individual where their total superannuation balance is above $3 million. And I believe, Jeevan, it was in our last webinar, we spent a bit of time obviously looking at the mechanics of that. So you can either go back and refer to that webinar on the BGL YouTube channel, or I've even put a link there where we had a federal budget update webinar ourselves, and you can go and have a look at the blog post that both myself and Tim Miller spoke about. What I did want to, however, talk to you about was, I guess, where things are at now in respect to these better targeted superannuation concession measures, because there was a level of hope as part of consultation. So we did have a specific SMSF industry consultation about 3 weeks prior to the federal budget. And part of that consultation was, of course, to have a discussion with Treasury to raise a number of issues with them. And ultimately, a lot of that has fallen on deaf ears. So one, we had a genuine short period of time to naturally get some of that consultation in. There was a very clear mandate from Treasury that there were a number of things that were not negotiable around that. And of course, one of those was the $3 million balance. And also the way in which the development of that approach is going to apply. That is something needed to be equal in terms of its application for both APRA and self-managed super funds. What has happened since then, because one of the reasons why we knew the government hasn't moved on this is because within the budget papers, the amount of revenue actually didn't decline through the removal of unrealized capital gains. It actually increased. So the number increased because of the fact that we saw the government now bank in the defined benefit pensions that they originally had not included and forecasted accordingly. So where are we currently at with this? We're currently at a point where it feels like the door's been shut a little bit on the industry to consult any further at this point in time. We had put forward to the government an alternate method, i.e. self-managed super funds through the SMSF annual return. And obviously, Jeevan spoke about the SMSF annual return and the release of the 2023 stationery today. All of the information we have readily available in there. Now, in an APRA fund, that level of member information is not readily available. So what was proposed, which is the natural course of action, would be, well, if we can apply actual earnings, why wouldn't we do that? And then if there is no ability to do so, then we would go back to the methodology that has been proposed. So where we currently stand is we have not seen any change. We will now be awaiting for draft legislation and regulations to be issued by Treasury, which we expect to be within the next couple of months. And then once we have that, there will be an opportunity to further consult on a number of these issues. Now, I guess in wrapping that particular topic up, one of the things that they made very clear was we can't have a different set of rules for self-managed super funds compared to APRA funds. And this was quite amusing because in the other measure, you can see here around the NALI provisions, that's exactly what we have right now. Because when we saw the proposed measures, or when we saw the current measures, I should say, around the non-arm's length income rules, what the proposal was is to make adjustments that would apply equally to APRA funds and self-managed funds. And this has been going on for the best part of 5 or 6 years around the way in which the non-arm's length income rules apply to general expenses in the fund. So I'm talking about here, and there'll be a number of you online today that have your own self-managed super fund. You're accounting for your fund using Simple Fund 360, and you're using the resources of your staff to actually help prepare that documentation. So we have this two-hat syndrome. Are you doing this work as a trustee, or are you doing this work in your own individual capacity? So you hold a license to do so, you're offering these services at large, so on and so forth. And it's that result that creates a non-arm's length expense. You've entered into a scheme that in essence creates non-arm's length income. So what the outcome of all this was initially a proposal to create a 5 times rate of that expense that was not incurred, that should have been incurred commercially. Now, again, following a fair whack in our response to the industry, to the government's initial consultation, we then saw in the federal budget a reduction from 5 times the gap to a 2 times the gap in the general expense. Okay, the other adjustment is that we'd need to carve out contributions in that process. And what we're looking at or needing to identify here is what is the difference between the actual amount that would have been charged at an arm's length expense and the amount that was actually charged. So if you do the accounting for your own self-managed super fund or a family member's self-managed super fund, and that fee would have been $5,000 if it was done on an arm's length basis, but that service is provided for free, then we have a non-arm's length expense issue, that we have an expense that relates itself to all of the income of the fund. And rather than all of the income of the fund being taxed at 45, we would now look at the difference between those two items, multiply it by 2, and then that amount would be taxed at 45%, and all other income in the fund would be then taxed at the concessional rate. Okay, so that is the approach that the government is looking to now apply. It is an announcement still at this point in time. The ATO currently have the PCG 2020/5, which is the current relief of arrangements that are undertaken on non-commercial terms at the moment in respect to that general expenses rule. But the ATO has made very clear that that current relief will be finishing on the 30th of June 2023. So you are going to need to look at these arrangements that you currently have. Go back and refer to the ATO's Law Companion Ruling 2021/2, and it provides a range of other pieces of guidance around if you have discount policies within the firm, whether you may be doing that work as wearing your trustee hat rather than in your individual capacity hat, so on and so forth. So as I mentioned at the very beginning, this is now going to be a unique issue to self-managed super funds, because APRA funds have been excluded or carved out of these particular rules, which we don't believe is very fair at all. And I guess the argument from the industry's point of view is that, is this issue still actually really an issue? So this goes back to 2014-15 when it was talked about with the concept of zero interest loans. It's kind of grown legs over that period of time. And where we currently now sit with a set of rules that exist for self-managed funds, but not for APRA funds, and the fact that we do have contribution rules and other things that could potentially capture this information, there is a view that the best result would be to actually take this out of the non-arm's length income rules within section 295/550. And rather, if we needed to, you could actually introduce something more specific to SMSFs in section 109 around the arm's length rules. So quick question there, what is considered NALI and NALI? So very good question, because NALI is where you have a non-arm's length expense. So if I use the example with the accounting fees, because you're not charging a fee that is commercially that you would be charging your clients at large, you now have an expense that hasn't been incurred or has been incurred but is less than what should be commercially incurred. So therefore, the fact that you have NAL-E invokes the NAL-E LI provisions, and therefore that expense that hasn't been incurred, or the gap between those two, would be taxed at 45%. Okay, so if you have those sort of arrangements, you do need to be looking at this over the course of the next little bit. Of course, with the ATO removing that concession, and then we will see it then impacting from 1 July 2023. Of course, once we get the specific and final changes to the law, and that they then come out in bill format and get finalised, we'll have more to say, and then the ATO will naturally update that Law Companion Ruling 2021/2 as well. So that's pretty much it from a technical point of view in the budget. As Jeevan said, there wasn't a large number of items that we saw for that particular topic as such, but there are a couple of things that do remain outstanding. And one of those is in respect to the residency issues. So we did see the former government announce that they were going to be removing the active member test from the residency definition, and 2, they were going to be extending the safe harbour around central management and control from 2 years up to 5 years. So the government has already previously mentioned in the last budget, so as in the budget 2.0 in October of last year, that they are committed to making these changes, but the rules, which were intended to start from 1 July 2022, won't start until the year following royal assent has been received. So if we don't see anything around these measures before 30 June, The earliest these will then start will be 1 July 2024. And the last one, which I know is a constant level of frustration for those that have market-linked pensions and old defined benefit pensions, we have not seen anything further around this 2-year amnesty to be able to unwind these sort of arrangements. So therefore, we need to sit and wait at this point in time. What we did flag with Treasury, however, is if we are looking at a number of these measures with the $3 million introduction and the problems that they're having trying to calculate those defined benefit pensions, it would make a lot of sense for us to give that 2-year amnesty to allow people to exit those in the current environment before we have to start looking at a whole set of different rules around or the way in which tax would need to be calculated in a defined benefit sense, as opposed to in a pure account-based pension sense in that respect. And the last couple of things here just worth noting is one is that the temporary minimum pension, so the 50% reduced minimum pension that we've had for the past few years now, will cease at the 30th of June. And the ATO did provide an update in their news and events in, I think, literally the last 24 hours, confirming that to be the case as well. So it applies to all account-based pensions. So that is an account-based pension, that is allocated pensions, old allocated pensions, and also market-linked pensions. Okay, so again, from a cash flow point of view with your SMSF clients, we need to start thinking about what that temporary minimum reduction now goes back to and looks like from a cash flow point of view inside self-managed super funds. And of course, the other thing in the budget was about payday super. Doesn't have a direct impact on SMSFs, but there is an alignment that we're going to be seeing to pay SG entitlements the same time as salary and wages. This is going to have a flow-on effect around data matching and underpayment of SG obligations. And finally, there was nothing further from the government around any freezing of indexation. So therefore, our general transfer balance cap does increase from 1.7 to $1.9 million from the 1st of July 2023. That has an impact on the payment of pensions that are starting with that credit. And it also impacts the way in which non-concessional contributions can be made as well. So we didn't see any adjustment to our concessional and non-concessional limits because they are linked to wages, and that wages growth wasn't as much to index it from the current 27.5 and 110, but our transfer balance cap does, moving from 1.7 to $1.9 million. So that's mostly it from a technical point of view. A couple of things that I just wanted to touch on from our Smarter SMSF platform. I know we have a lot of clients that use our document platform and the integration that we have within Simple Fund 360 to audio documents. So one of the areas that we've put a lot of focus on in recent times is around our fund establishment process. And this here really explains to you an end-to-end process in terms of setting up the company, setting up your fund, and then using those, I guess, data flows or document flows. Not only whether you want to pull that information out of Simple Fund 360 or CAS 360, but also if you want to be sending that information as well. So we have had for some time, if you incorporate a company, you can post that information across the CAS. What you can now do is all the data that you have from within that company incorporation that will be relevant to your new SMSF order will flow through to that new SMSF order. And once that document has been generated, then naturally you can post or push that information across the Simple Fund 360, both in terms of the data, but also the documents if you want to utilize the electronic signing that you have within Simple Fund 360. Just note, we still do have some limitations on what can and can't be signed electronically in respect to both the Corporations Act and also the SIS Act. All right, so deeds are okay. Certain other aspects that are required under the SIS Act, such as trustee declarations, such as consents to act under the Corporations Act, we do not have finalised legislation yet around those particular issues. But one of the things that we have also now finished is our ABN TFN integration. So that is, you can now complete your new SMSF and an action, then all the information from your company and fund orders will then populate into the ABN TFN and enable you to now complete that online. And then once you have that ABN issued, update that to Simple Fund. So this is already now live on our own platform, the smartersmsf.com. We do, of course, have our BGL purpose-built platform, and we are currently adding that in. So that's just a screenshot you can see there. It is taking the data straight across from the new SMSF form and populating all that information in there. Now, we do have a pricing point to be able to utilize this. This is an integration that we have through the Australian Business Registry as a digital service provider to be able to organize and do this. We will, once we kind of work through this first quarter of using the ABN system, we will expand it out to be able to do GST and PAYG withholding registrations as well. And I should note, this only relates to registrations for self-managed super funds at this point in time. So we are testing at the moment with the Simple Fund 360. It all goes through our API, but in essence, we've completed it. We have some of our members actively using this via our own platform at the moment. We suspect, and we'll demo this, we do have an integrations week that we're doing in June, I should say, and this will also include not only our integration with BGL, but also an integration, a full live demo of the entire fund establishment process as well. So the idea behind this is, of course, that we're using the data to pre-populate answers, which saves you significant time. I know, talking to a lot of people, the frustrations, and having done it myself historically, the frustrations of the ABR in terms of adding authorized contacts, answering questions which we all know are related and relevant to the SMSF application form. So one of the things here is the requirement for the electronic service address. So quite clearly, we're pre-populating within Simple Fund 360 the electronic service address that is unique and relevant to Simple Fund 360. So we're recognizing that it's a self-managed fund. If we have a company and we have 2 members and directors, that we're creating 3 authorized contacts instantaneously inside that form. So we're seeing 20-minute plus savings when you start to incorporate the doc flows of form to form. We see potentially half an hour or more saved as part of that entire process. So what happens then, I guess, from the completion is that we then are giving you a response. So the other thing I should say is we are a trustee provider, but we can be agnostic to the deed supplier. If the deed suppliers aren't actually using this, you would be able to use the Simple Fund or CAS 360 data to go ahead and do this process as well. We'd like to think they'd be using ours, but we know that that's not necessarily always the case. So the other final thing here just to note from this is you will then get, upon a successful submission, a status that is then displayed as finished. The ABN has been issued by the Australian Business Registry, and then we will generate a document that looks a little bit like what you get from the Australian Business Registry, but it's a integration response. But it gives you the ABN, it gives you the name of the fund, the date that it's active. So we're getting the response information, the date that it applies, and a document number. So the document number is crucial because it's your reference number if you need to follow up with the ATO in respect to documents that haven't been issued or error messages or something, or not error messages, but messages around a potential hold on the issuing of the ABN. Okay, so this is the process. You will get a successful or a finished submission upon the successful submission. And as we note in the actual document, the ATO will then forward the relevant notices per their standard practice once that has gone through successfully. If it hasn't gone through successfully, then you'll be notified that it's not. If there's an error message, you can download what that error message is, amend, and then resubmit. So you can see that little amend button down in the bottom left-hand corner there. If it's lodged, but it's been withheld, subject to further ATO investigation, again, you'll get your document number there to ensure that you can go back and get in contact with the ATO to follow up around that process as well. The final thing is once that has been successfully completed, then not only can you download the document there, but there is a simple push to Simple Fund 360 button. So that will allow you to then successfully post it into Simple Fund 360. So you'll get the green message. You can see at the top to say it's gone through. And then in the bottom here, you'll then see the ABN populated into Simple Fund. If there was any reason why it doesn't go in, you'll get the red message that you can see there. And then you just need to check as to why that has occurred. Typically, you're going to, because if we're pulling that information down and it works, that information would naturally recognize and therefore upload accordingly as well. So like I said, from the beginning, I guess we're at the point now where we are in the final stages of testing with this in Simple Fund 360. We expect to have this end-to-end process available from 1 July to make sure that people that are setting up new funds on 1 July will be ready to go. For those of you that haven't used our services and you want to find out more, there is pretty much 4 steps there that you can follow. So from within Simple Fund 360, under the connections area, you will see order documents. If you are connected already, it will enable you to simply connect both your Simple Fund 360 software to our Smarter SMSF platform. Those 2 things coming together will allow you to order a number of documents. If you haven't done that before, all you need to do is click on that, put in some registration detail to be able to order on a pay-as-you-go basis. That will connect you, and then you will be able to get underway. And if you've got any other questions that you'd like to know about our document packages and subscriptions, then feel free to get in contact with us. I've got the contact details on the bottom of the screen there, or you can jump on our site and use our ticketed support and chat service. So
I suppose thank you for your contribution, like always, and I suppose we'll have some more exciting stuff to talk about next month. Yep. As mentioned, if anyone who missed the start of the webinar, a recording of today, a link will be available on a YouTube channel shortly or later this week, and we'll email a link to that to all attendees. I'll give a copy of the slides as part of that, so everyone will receive a copy of the slides as well. And then we'll follow up with some of the questions that we mentioned. So thank you everyone for attending, and thank you, Aaron.
Thank you. Cheers.
All right, bye everyone.